listening to the Daily Gold Podcast, covering precious metals, the junior mining sector, and global capital markets for intelligent investors. Now, here is your host, Jordan Roy Byrne.
The crowd is right most of the time. There is some irony in discussing this now because the precious metals sector is about to start a correction. The signs are there, and stay tuned for an article about that, which will be posted on thedailygold.com probably Friday. Right now, at this moment, the crowd will be wrong, but in this commentary, I'm only talking about the very big picture. Now, in the very big picture, in investing in markets, the crowd is right most of the time. It's wrong only at turning points, which are very hard to predict. It's cool to be a contrarian, but if you're going to be a contrarian, you have to be right. Michael Steinhardt, a famous hedge fund manager, said that. Because contrarians are wrong most of the time. Betting against the crowd doesn't work unless you nail the turn. In terms of cyclical bull markets, you can divide the market or sentiment into three phases. The crowd is wrong at the start of the bull and at the end. But the middle is the longest phase and where most market participants make their money. With respect to the current cycle in precious metals, we are still in the early stages of that middle phase. But let's say this cycle peaks in 2024. So less than 4 years, maybe 3.5 years, something like that. Well, this middle phase could last to, deep into 2022 or maybe even 2023. So eventually, gold is going to break through 1900, the 2011 high, and make a new all-time high. It has measured upside targets of 2,700 to 2,800 an ounce, and there's a strong Fibonacci target around 2,900. So for the majority of that next $1,000 worth of upside, the crowd will be bullish and will be right. One of the best sentiment indicators for gold and silver, any commodity, is the net speculative position in the futures market. It will rise as gold rises and then decline when gold declines. Sentiment usually follows price. But if you look at the past major breakouts in gold, sentiment actually was very bullish at the time of these major breakouts. 2003 was a big breakout with gold breaking above 300. It was a multi-year breakout. Late 2005 was the biggest breakout we've seen in a long, long time. Gold was breaking out of a 20-year downtrend. It eventually made a multi-decade high for the first time in decades. Then in 2009, gold consolidated for roughly 18 months or so during the financial crisis. Then gold was able to break above $1,000 an ounce. The net spec position in gold right before these breakouts was actually quite high. And then it became larger and larger as more speculators pushed gold higher after those breakouts. In fact, we saw the exact same thing last year in 2019 when gold broke above $1,375. And you could bet we'll probably see the same thing when gold eventually breaks past $1,900 an ounce or $2,000 an ounce. So my point is not to completely ignore sentiment and throw caution to the wind. It is to understand in a larger sense how sentiment shifts during a bull market. There are points when a trend can run hot for a while, and as a result, sentiment will run hot as well, and the crowd will be right during that period. As an analyst, trader, or investor, you need to understand this and adjust your parameters for identifying extremes. An extreme early in a bull market or in the middle of a bull market, and at the end, they can be different. These are different periods. Now, in this respect, I consider many things such as sentiment indicators, breadth indicators, momentum oscillators, etc. These are things that can help me in determining when a trend has run too far and a correction is due, like right now. And with that said, precious metals are probably going to cool off now, but that's a good thing. You'll be able to buy at lower prices. But in the future, when prices rise again, just don't be scared away if the crowd gets a little bullish.
Thank you for tuning into the Daily Gold Podcast. For more interviews, editorials, and analysis, log on to thedailygold.com. And for premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.